Peter, welcome to NDTV Profit. What an interesting time to really get your perspective. My first question, how do you see this geopolitical tension that has really started the 2026 year with in Venezuela, that impacting the crude oil prices? Is there going to be a supply glut?
Well, good afternoon, Nisha, and thank you for the invite. I'll tell you what, it's been extraordinary when we're looking back over the last week, what has transpired.
Yes.
And it seems to be structural weakness as far as price. And that glut, as you highlighted, I think it will come very much into the field of things over the first quarter. So as we roll this forward, one would think that we'll build on those big, drawdown as far as price. What we saw was a washout over 20% off for the year. And I think that that's going to continue as far as softness for energy prices, certainly leading into first quarter and second quarter.
All right, so you're saying first quarter and second quarter. Many of the economists across the world, Peter, have really brought down their projections for crude oil prices from over $60 per barrel to 58 or so on an average for the next year. Do you have any particular number?
Yes, I do, Nisha. I think that I'm keeping a very close eye on those high $52, $53 for WTI. I feel as though Brent will, I want to see it break 56. It's currently right on $60 as we speak. And that structural softness that I'm feeling that we could be under $50 by end of year. But it's a very long year, as we know. And I think there's going to be a year of much geopolitical concern that can always change the landscape as far as energy prices at short notice.
That's right, Peter. But, one cannot also, Venezuelan event probably has overshadowed what we dealt with in the last few years. That was the Russia-Ukraine war. And how are you seeing that really impacting the crude oil prices as well as the geopolitical tension in this particular year?
Well, it's been a protracted war, as we know, Nisha, and we're slowly getting, we understand, closer to some form of resolution between both parties, and certainly President Trump's involved in that as well, with President Putin and Zelensky. So there's the first part of it. If this was to materialize and there was to be a complete and utter ceasefire, I think that would strip a number of dollars as far as any form of war premium out of the crude market. It could be a couple of dollars, maybe two or three, that would come and be taken straight out of that price point. So that's what we're sitting with at the moment. It's very much a work in progress. And I think for the long-term horizon, one would hope and think that there would be some form of resolution by either end of first quarter or certainly somewhere between that and the second quarter.
All right. And apart from that, any other factors that are on top of your mind when it comes to the crude oil price outlook besides these two geopolitical tensions, Peter?
I want to keep a close eye on US dollar. I want to see what happens with the other commodities, of course, being industrial metals and the overall theme of, tariffs and how that's all going to, how it's still very much a work in progress to see all of those moving parts come to some realization. This is the point forward. And so I feel as though it's very early days from a tariff perspective. There could be hiccups and bumps along the road. So again, we have to work through that and just to get to a point of this is the final positioning, and then, cheaper prices rolling forward from there into 26.
Right, Peter. In fact, well pointed out, the uncertainty regarding the tariff war globally is also an uncertain factor along with the geopolitical tension, which really defines the matters and the price movements for many of the commodities. But what about copper hitting record levels? What's your view on that?
Well, it hit 13,300 approximately overnight on the London Metal Exchange. I also noticed that COMEX, Nisha, was at $6 a pound. Now, it's up over 20% since late November. Now, that is quite incredible, up 20% in 6 weeks. So I'm forecasting probably up to 14,000 by end of month, and the velocity that we've seen over the last couple of, maybe the last week or two, has really started to gain even further traction and horsepower. So as far as a price point, yeah, maybe 14.5 to 15,000 over that first 2 quarters. And it's very hard to forecast out from there, but also keep a very close eye on some of those other industrial metals, Nisha, because it's their time to shine.
Other industrial metals also very important, but what really shone really in the year 2025 towards the end, Peter, was clearly silver. Silver has turned into the new gold, it seems. What's your projection for silver trade and the price movement?
You know, if we go back, today's Wednesday, we go back to Monday and it was at $71. Now it's at $81. Now it's had a huge, so that's up nearly 15% in 2 days. Now, our all-time high is $84. I'm tipping that it'll get to $92 to $95 by end of month. And the overall momentum leading forward from there, you know, through $100 sometime in end of first quarter. Let's just wait and see the momentum. But I don't think it's going to be just a straight, you know, upward tick. There will be valleys and peaks, and you'll see big price moves. But that's the market for you. And this is not unusual to see big pullbacks of 6 and 8% in a day and then acceleration over a couple of days to the upside. So, yeah, they're dynamic markets to trade, Nisha.
That's right, Peter. In fact, all that glitters is silver, you know, in the last few weeks that we have seen. But thank you so much with all your perspective on the various commodities and the price movements. We'll revisit all of that when there are more certainties coming up and new factors that emerge. Thank you so much, Peter, and have a great 2026.